Welcome back to another Real Estate Note Show. This week we'll be talking about 40 years of being in the note space. It's an exciting time. Before we jump into that, my partner in crime, I'm Dave Putz from JKP Holdings, Nathan Turner.
Hello, hello. How are you?
Good man. How have you been?
It's been good. It's been good. It's been a busy fall, heading into a busy late fall into the end quarter here, but rather be busy than bored, so that's good.
Yeah. Yeah. I think we were just talking off air before how things are adjusting and changing in the note space and that um, wondering where the next curve is going to be. But before we get into that, what we've been doing in the note space for the last 2 years is diving into the seller finance space.
Yeah.
Because, as we said just a few minutes ago, that is the real area where we're focusing. So we're trying to connect all these seller creation people with note buyers and talking and sharing information, sharing knowledge so you can be a better note creator and these note buyers can understand the note creation side a lot better so they can buy the assets these people are creating, right?
Yeah. Yeah, we love to work together and
Yeah.
train each other on how we can complement each other better. And so yeah, it's been a lot of fun, I think, actually over the last couple of
Yeah.
years and just kind of discovering a lot of this stuff and we've got Eddie on today and he's been around the block a couple of times and no surprise to him, but that's all right.
Yeah. Yeah. And we're going to jump in with Eddie about his background. For those who don't know who Eddie is and stuff about that, we're going to cover that. We're also going to talk about the big upcoming Note Expo that will be in just a few weeks. So we're going to get into that. Um, what have you been seeing recently in the note space regarding assets? Have you seen your portfolio start to change? What you're seeing out there change? What have you been seeing?
For my portfolio, it hasn't changed a whole lot, but we have had some discussions with others, and they're seeing some cracks where we're seeing a little bit more defaults starting to creep in. And I think that's interesting. It's not a surprise. This is what we've been saying is going to happen. Uh, and it's going to be really interesting just to watch over the next, 6, 12, 24 months and just kind of see what is coming and what kind of a fallout we're going to see. And that'll be interesting. And I'm sure Eddie will have some opinions on that as well.
Yeah, absolutely. I'm seeing the same thing. A couple of our assets have started defaulting. Things are just starting to act weird. The borrowers are saying, listen, we're not even answering our phone calls, which
Mm.
they've been paying for 5, 6 years now. And just trying to find out what's been changing has been
Yeah,
really unique. Some borrowers have reinstated 3, 4 times and they just keep falling behind and saying what's happening. So it's really curious. Um,
interesting. Yeah.
are you seeing supply of assets changing in the last month or so?
Not a huge shift. Not a huge shift. My goal is always to kind of connect with, like last time we talked with Marco, he talks about just buying those mom and pop notes. My goal is more to connect with those who are doing it as a business where they're creating notes on a regular basis and then looking to sell those notes. So I haven't seen a huge shift in that. There's still a lot of guys out there doing that and loving to connect with those guys and see how we can work together.
Yeah, absolutely. I think that's a key thing right now is that understanding and really reaching out to those people, explaining to them what a good note looks like so we can
Yeah.
really help them create better notes. And we talk about really leading, and I'm sure Eddie will talk about is creating two notes instead of just one. It'll help a lot of people really sell the note better and be better creators and replenish their capital.
Mhm.
Absolutely. So,
Yeah.
well, without further ado, we're going to bring on the legend, Mr. Eddie Speed. How are you, my man?
I'm good. How are you?
Good. Good to see you
Real good.
again. You
Real
look
good.
healthy. I'm sure you're a lot warmer than we are here in Jersey.
Yeah, no, actually, it did cool off here in Texas. It was in the 90s last week. So, yeah, so glad of that. But it'll be pretty for Note Expo, I think, as it usually is.
Yeah.
Yeah,
Yeah.
Very good. Yeah,
So
looking forward to it. It's coming up quick here.
it
so
is.
before we dive into Note Expo, which we're gonna spend a lot of time for those who don't know Note Expo, it's a huge event in down Dallas. Eddie, for those who don't know you, who are you? How did you get introduced to note investing? Give us a little background about you.
Well, I was not very strategic in finding the note industry. It sort of found me. I was dating a pretty blonde-headed girl named Martha, and her dad was one of the pioneers and legends in the note space from the beginning. And he became my father-in-law later. And yeah, he introduced me to the business. I was 20 years old. This was in 1980. And so Martha and I married in 82. So I've essentially kind of served an apprenticeship with them, he and his partner, for a couple of years. And then Martha and I married in 1982. And so then we kind of moved to the market, which was Dallas Fort Worth, to buy notes. Now, that wouldn't necessarily be a truth today, but it was a truth back then that you kind of moved to the market. So they had another guy in Houston, and I had a choice between Atlanta and Dallas. And of course, I'm a real cowboy and had lived in Texas before. And so why not do that, right? So we moved to Dallas Fort Worth, and we've been buying notes here since 1982.
And you've been buying notes all over, all over. I know you're from Texas, and of course, Texas notes are really great notes. Tell everybody about what have you seen it shift? You got started in 1980, 1982. How's it shifted over the years?
So I started in 1980, and I would say for the first, about 10 years in the industry, predominantly you bought notes from just mom and pop that owner financed a property. A lot of these notes were created because of high interest rates. So there was a big pile of inventory of those kind of notes. And it's really just what we knew to do. I kind of perfected the technique of dropping mail to people that owned a note. I did that in 82. So I'm the first guy to ever drop mail to any customer, either a house or a note, and say, do you want to sell it? And I just did it by courthouse research. So it was a very crude process, but you've always got it. There wasn't even a trail. You had to take a machete and blaze whatever trail you wanted. And so anyway, we kind of figured that out, and we used a couple of techniques. I bought some notes from some real estate investors in the 80s. In fact, a guy that changed the trajectory of my business, I bought some notes from him probably around 1987. And his name was Ken D'Angelo, right? He's the guy that founded Home Investors, right? We Buy Ugly Houses. So around 1990, he basically came to me and he says, Eddie, note buyers are inconsistent. They don't pay what we think when we create notes, and then we go to a note buyer, they don't pay the price that we think that they should pay. And I said, that's because your notes are very inconsistently structured and drawn up.
Yeah.
Right. And so we're now telling each other we're inconsistent. Well, that leads to, he says, Eddie, I have a franchise. He says, if you go to a McDonald's anywhere in the world, that McDonald's quarter pounder tastes the same. He said, that's what we need for notes. And so nobody had ever done this. And we sat down literally with 6 easels and 6 whiteboards around 1990 in my office every Saturday morning for about 3 months. And we really mapped out a recipe of how to make the best notes. And I started that literally in 1990, and it kind of revolutionized the industry. They went from an industry that did about $75 million worth of business a year to about $500 million a year in about 2 or 3 years.
Yeah.
So it really became the case. And what I learned is no real estate investor knows how to make notes until they have instruction and guidance. So we, along with others, I'm not saying we're the only ones. We may have been the first, but we're the only ones that give people a matrix, give people a recipe, give them a formula today, and say, we want you to make the best notes, whether you sell us the notes or you sell them to David Putz or Nathan Turner. We want good for the industry, and I think that if we'll have an abundant mentality, we'll all do that.
Absolutely.
And that's kind of from then till now. I bought 50,000 seller finance notes, and the reason I've done that is because I built a manufacturing system.
That makes sense. What mistakes have you made over the years that you've adjusted or shifted? What are some of the bigger mistakes you've made?
Mistakes. I don't think I've made any. Listen, I had to be the dumbest guy you've ever met, because nobody's made more mistakes in this industry than me. I mean, that's 100% on that one. That is 100%. You know what I really think is, when I look back, what I did then and what I think that we are talking about now is I took seller financing and kind of pasted mortgage banking over the top of it. I took mortgage banking concepts and pasted over the top of kind of a cowboy industry, right? And I bought a lot of land notes. I probably bought 20,000 plus land notes. So I know land notes pretty well as well. And so that's really kind of what I'm out there doing, is trying to influence the industry. I think my personal skill in the business is financial modeling, like developing financial modeling techniques. My father-in-law and his partner invented the partial. We've probably done 25,000 of them. So there's a lot of people on Facebook like, oh yeah, I do partials. Well, okay, there's football too. There's elementary football and there's NFL, right? Both are football.
Yeah.
It may not be at the same level. And so we tried to spread those things over the industry and spread truths. The biggest mistake I've made, Dave, I believe, is misunderstanding the impact in the market. And so not knowing enough about the trends and not really knowing how the trends were going to affect me. And Nathan will tell you that I will wear you out now with data and facts and market stats and stuff. And it's because I don't want another one of those scars on my back.
Yeah.
And then, when did you
got to know the weather forecast?
Yes, absolutely. And then I'm curious, when did you start teaching? Because and reason I ask partly is yours was the very first note class I took back in 2009. I'm pretty sure it's down in Houston, if I'm not mistaken.
So I took a bunch of real estate investors in the 90s.
Okay.
Home investor franchisees, people like Mitch Stephen, people like that. And my job was to teach them how to make better notes.
Okay.
So I was teaching. I wasn't really a guru. I didn't have note school. I really did it then just to go help people make better notes so I could buy their notes. And so I kind of started really teaching then, and it wasn't really a class or there wasn't anything like that. And there was a note trade show around 2000 that they called Noteworthy. It was a trade show and a newsletter. And John Richards, who owned it, had gotten leukemia, and he taught it with a long friend of mine named Hank Herrenberg. And so Hank called me and says, "Would you come teach this class with me?" And that's how I got started teaching, and that was around 2000.
Wow. Okay.
Come a long way since then.
I've spent a little time on stage since then. Right?
Yeah, no kidding.
Yeah. So with notes and everything else going on, the adjustment and change, what are some of the biggest mistakes note creators have made over the years that you've seen that those who are watching should avoid making? What are some of the top 3 you would say mistakes you've seen in paperwork?
Well, the most valuable notes look like a mortgage bank. You know, you have Fannie Mae loan docs. You have all the documentation. You have the loan app. You have the verifications. You have a stack, right? A paper stack, they call it. Just things that make you look like a mortgage lender, right? And the loans are written very homogenously. A Fannie Mae loan says something to us.
Yeah.
FHA loan says something to us. An SBA loan says something to us. Yet people seller financing and a lot of the gurus, they try to do a bunch of cockamamie stuff, and think it's cute, or they think it's, I don't know what they think. But when you go in the secondary market, all that paperwork that's weird is worth less money.
Yeah.
It won't trade in the marketplace at the same price. And so so I figured out a long time ago, this is our gift to the industry. The industry does not know how to be a mortgage banker. The day you sell your property, the day you own or finance, you went from a real estate investor to a mortgage banker. That's what you are.
Yeah.
And so now it's our job. It's not, they're great at what they do, but they need us to help them be great at this. And so if we just look at that as an industry responsibility, then we become a great network. Listen, seller financing is up 25% in 2023. It's not, we don't lack inventory. We create 100,000 notes a year. Nathan, you gonna buy 100,000 notes next year?
No.
How about you, Dave? You gonna buy 100?
No.
I think there's plenty of inventory to share.
Yeah.
Yeah.
The problem is the quality of the inventory.
Yes.
Yeah.
And so the industry leaders in the note space have to go lead their seller financiers to think like a mortgage banker and to help them do that so that they create a secondary market for their notes. Whether they decide to sell the notes or keep them, the notes are going to be better. They're going to stick. And that has been an industry theme of mine literally since I helped Homevestors in 1990. And, am I on my soapbox about it? I think our industry should be.
I think me and Nathan, for the last couple of years doing this show, we've been on that soapbox of preaching, guys, this is not a fly-by-night situation. You can lose your entire life if you do things incorrectly. You can lose a ton of money. You can lose a lot of friends. You can lose a lot of relationships. Doing it right is important. It's not doing a paperwork on a dining table with a borrower and just saying, hey, give me 10 grand. Let's make it a deal. It doesn't work that way.
Well, it's been tested through time, right? I mean, I believe that I've looked at 300,000 or 400,000 seller finance notes. I mean, I'm just kind of making that up, to be honest with you, because nobody could ever keep up with that over 40 something years, 44 years now, right?
Yeah.
And nobody could keep up with it. I'm just saying statistically, I know what our look rate and our close rate is. And if I've closed 50,000 and I know I can say with integrity, I know I've closed more than 50,000 seller finance note deals. So with that being said, if you look back at all the loans that we looked at and passed on or whatever,
Sure.
and so the deal is the industry has an opportunity to really straighten it up. So, I start out and say the formula is not very hard. Good property.
Yeah.
I ask you, Dave, to speak at Note Expo about
Yes.
good houses. I have another land expert that's going to talk about good land. My dad used to say, country expression, you can't make a silk purse out of a sow's ear.
Yeah.
Okay. So
Yeah,
if
I
you
like
got a
that.
crappy piece of property, you can't make good notes out of it.
Yes.
And there's a whole lot of people out there claiming that you can, particularly the land guru thing. There's some misguidance out there. Not every one of them. I'm not saying that. But, if you don't know what a sandlot is, if you buy some of those notes, you're going to learn.
Yeah.
You might learn it in a way you weren't anticipating, but you're going to learn, right? And then, good land and good houses. That's the ingredient. Then good marketing. How do you market property in the correct way? And Nathan, you're going to talk a little bit about that. And I have another guy that's really good at it that's going to be on stage at Note Expo talking about what have they learned about how to attract the best buyers. Let me tell you this, Nathan. If you put bad credit, no credit, no problem in the ad, or if you put no bank financing needed, will finance you in your ad, you're going to attract bombs.
Bottom of the barrel. Yeah.
You got it. You're going to get what you advertise for. And so those are the things that a real estate investor needs to know to make good notes. And those are the things that I try to spend time with helping people make good notes. So like these are the ingredients you start with.
Yeah.
I'm
You
going to make a
mentioned
note of that because I'm talking about due diligence, and that is one that I don't know that I've thought about in the past. Because it's only been more recent that I've been buying seller finance paper. Before that, it was all bank paper. So if it's bank paper, it's bank paper. Then they're not saying that kind of thing in their ad. But that's a good piece. Is with the seller finance paper, how did you market this property?
Steal some thunder.
Yeah.
Here's the best ad you can ever write.
Yeah.
Private financing for deserving buyers with large down. Private financing for deserving buyers with large down. Yeah. Don't even put seller financing in the ad. Seller financing to the consumer eyes means non-qualifying.
Yeah.
So we talked about the down payment before we got on. What's your feeling about down payments? Do you think that there's a percentage a borrower should come up with? Is there too much? Is there too little? Where's your thoughts on that?
I think that down payment is in people's imagination and whatever you believe you can accomplish.
Mm.
The average down payment for a conventional mortgage loan today is 19% cash down. That's the national average for Fannie Freddie loans. That's just what it is.
Interesting. Yeah.
And so seller finance people with substandard credit and get 6% down. And I'm thinking, well, Now, down payment doesn't mean a sticky pay history, right? It doesn't mean because somebody pays 40% down that they're always going to pay super prompt. So down payment is the buyer's skin in the game. Their credit of how they've paid others is their historical measurement of of their propensity to pay, right?
Sure.
So I think there's a combination of both. I think you can always get 15% down every time. I mean, literally every time. But I think, I think land, you can get a bigger down payment than that. And once again, you're going to have listeners on here. Oh, that's not true. And well, I don't know. I've only bought, 3,000 portfolios of notes from real estate investors, right? I mean, I've only seen what they've done. And then one guy says it's impossible. And the guy that's 10 miles down the road from him, I see him doing everything that I'm saying can be done. And I've learned it's almost what you convince yourself of. So I think we can influence the industry and help them see how to do better. See, if it's possible, they'll do it. They just haven't seen it.
I agree with you. I think that my problem is that we see sometimes when we see these assets, oh, I got 3% down, I got 4% down. And I'm saying that's just not enough skin in the game, right? That borrower is limping into a deal and it becomes dangerous. We literally look for deals where it's at least 10%. We want to see the borrower has some skin, that they have the ability to save money on a regular basis.
Well, look backwards, guys. Look backwards a little bit. Why are you seller financing somebody? You're seller financing somebody because they're not perfect enough to go get top rate mortgage financing.
Right.
Well, the mortgage credit availability the day the virus started was at 185. That was the index score. Today, that score is right around 100. So that means about half the people that could qualify for a mortgage before the virus can't qualify today.
Wow.
Left them behind. So why look for the bottom of the barrel versus people that are just missed? That makes sense?
Yeah, absolutely. A high quality buyer who just can't get bank just because something is quirky and just off is ideal.
Go look at non-QM lending standards.
Yeah.
Go look at non-QM lending standards. There's almost 40% of mortgage loan originations today that are non-qualified mortgages, non-QMs. Go look at what they think is a standard. Go look at their down payments. Go look at their credit standards. That's who your competition is.
Yeah.
Does that make sense?
Yeah, absolutely.
And don't you think they would deepen their standards if they thought they could get away with it?
Oh, sure.
Yeah.
So why not learn a lesson? And that's when we look at helping people build a box, an underwriting box or a criteria box of how to create loans. Then we point to it and say, this is the market. And now all of a sudden, we're going to give you some flexibility. We think we understand ITI and buyers better than the market does, right? And so there's certain things, green card holders, right? We think we understand certain market conditions better than there's certain things that we can be a little deeper in because of, gosh, we've been looking at this paper a long time, right?
Yeah.
So anyway, those are the ideas. What I hope to do in this conversation is just continue what you guys are talking about frequently, which is make sense seller financing.
So we did have a question. How to obtain their down payment and their quantity is one way to qualify there. Is there a huge difference between a tax return and savings for 2 years? Am I saying it correctly?
Yeah, I mean, here's the thing about it. Like we can all get nerdy and, philosophize about, people that, have a lot of money in the bank and, but yet they're not showing it on their tax returns and, so forth and so on. One of the best things that happened because of Dodd-Frank, and there's not a lot of good things that happened because of it, but there is it forced people to actually hire an RNMLO. Let me say this about RMLOs. They're not all equal. They're not all equal. And I can tell you right now, some of them that are fairly brand name are out there and they're not really verifying the income the way they need to.
Mm.
They're sort of glossing over it. And so I'm calling the industry out saying, look, if you state on your application, Nathan, that you make X dollars, that is not verified income.
Right.
That's name it and claim it.
Yeah.
Right? They used to call them liar loans back in the old subprime lending days.
Yeah.
And so understand that I believe that a story has to make sense. I believe that everything about seller financing is pretty simple. It's redeeming and unredeeming factors. We do less than perfect customers, but they have to be perfect enough. And there's a balance, and this is a little bit of an art. And we find ourselves, you guys included, we find ourselves in the industry teaching this art on a continual basis because it kind of is an art.
Yes.
Yeah. And that's exactly right. We say, well, here's the criteria, and they say, well, they didn't quite meet this, but then they've got this instead. And we're like, actually, yeah, that's okay. Then that makes sense. And you've got that unredeeming and redeeming factor, and they kind of balance themselves out depending on what it is in the situation. But that it happens.
Are you saying that when you say 700 credit score, you're not talking about the combined credit score of
Right.
So one of the things cool I think about Yeti is that you put on a show, education master class of knowledge in Dallas. I've been going for years. I got introduced through a friend of mine, right? We both know. And it is amazing to hear the information coming from years of experience, not 2-year gurus, years of experience with quality and really wanting to help. And I think that is important for most people who are maybe on the fence about going to a Note conference, first off, and then saying Note Expo coming up in a few weeks is where we want to be. I think for me, when I attend these sessions, I'm sitting in the seats with years experience taking notes because of the information, because of the experience, and because of the notoriety of the people who are speaking. For those who are brand new to this space or just on that fence, can you share a little bit more about Note Expo, how it came about, and what can they expect at Note Expo?
Well, Note Expo is more than a dozen years old. And the reason I formed it is because I looked around the industry, and I'm not being disrespectful or respectful. I'm just calling it what it is. The people that were putting on note trade shows were not in the business. They didn't know who was real. They didn't know who wasn't. They didn't know what was really happening in the industry, but yet they had a trade show, right? And I thought, well, that's not, they may be sincere, but they may be sincerely wrong. Right. And so I look at it and said, we are the guys that are out there in the space. We have an educational component, so we can drag our herd in there along with the other people and not make anybody feel like this is note school, subliminal, like it's none of that. It's none of that. Right. But we can go put out in the industry what we need. And because we do own a school, we have a few thousand people that attend a masterclass with us, a virtual masterclass per year. So they come to about a 2-hour thing, and so that we can learn from them what they need to learn, or where gaps that they have in their knowledge, or what their pain is, what their concerns are, right? We are very open to say, man, you guys take and put this in your chat box and let us know. And we got some fairly smart people that work for us, and they're also pretty dang good at like AI. And they can go take thousands of comments and melt those into things and then sort those into categories. And so we came this year with Note Expo, and we essentially changed the format. And we did it because what we figured out people needed is they needed a sequential path of how to create and buy and what's a good note look like? What's a bad note look like? What do people that have learned how to do this figured out that maybe somebody in the audience just hasn't heard yet? But we're doing it. I'm not, listen, I've been to lots of trade shows, right? A lot. And I know panels can be good and panels can be bad. And I just said, I've been to a lot of trade shows, and I'm not talking about yours, Nathan, so I'm not picking on you at all, but I've been to a whole bunch of trade shows, and the panels are just, oh my God, I can't stand it. And I want to cut my throat by the second panel that I sat through. And I'm like, screw that. We ain't doing no boring panels. We have one panel in 2 days, and that's the Seller Finance Coalition. And obviously, you guys have supported us in that in the
Yes.
past. And I think
Yeah.
having myself and Jeff Watson and Tracy and my wife, Martha, and, people of various experiences that have been involved in it, like that panel is collaborative and it matters. The rest of it is I'm putting you guys on stage, and you got 20 minutes to go do a note talk that talks about a segment of your expertise.
Yep.
In the next part, and like everybody up there, there's not a loser up there. Everybody up there is a rock star that does this business well with integrity and with knowledge. And we're building a sequential story that I think is how to make better notes, or how to buy better notes, or how to recognize a good note from a bad note. That's really what it's about.
Yes.
Oh, and by the way, we got a crazy, crazy inspirational speaker.
Oh yeah, good.
Yeah. So this guy has 2 Super Bowl rings. He played for the Patriots.
All
He is in charge of player affairs for the NFL. His name is Dr. Don Davis. This guy is tight.
Very cool.
So he is our inspirational speaker. We're very blessed. Our MC, Ron Eccles, who you guys know is very engaging and very, he creates electricity, right? And he is personal friends with Don. And so we were able to get Don to come speak for us. And then our second keynote speaker is a guy that you guys know is, like, I consider him the smartest guy in the industry, my friend Kay Thompson. He's bringing technology to the mortgage industry. He's kind of leading the industry in a way that's like lightning. I mean, it's outstanding. And so he's going to come talk about what that is and how it will affect industries even like ours in the future. And so we've got some really great speakers. Now, I was meeting with Ron Eccles yesterday about the curriculum, and I went through every speaker. I talked about you guys. I talked about all these different people and stuff. And I was giving him the vision of what we were doing in NoteExpo. Like, we're building this out as a story that nobody is too knowledgeable or nobody is too novice to get this, right? You're going to get different levels depending on your experience.
Sure.
Not going to leave anybody behind. It's not going to make somebody run out there and go get a Coke because they're just bored to tears. It's not going to be either one of those.
Yeah.
And I was telling him this whole story, and I said, one of the things that you're going to find is there's not a bad spot in the convention. Like Saturday afternoon is just as tight as Friday morning.
Yeah.
Like, it's like there's not a bad spot in it. We did that on purpose. And so we're really excited about what the Expo is going to do. And here's the last thing I would say. Can you tell I'm fired up about this?
Yeah. I love it.
This NoteExpo is a community, right? It is a community of like-minded people. It is a community of people that are go-givers. It is a community of people that have a lot of experiences that you may not have. It is a community of vendors that can be the boots on the ground that aren't your boots, or that can do the things for you that you don't have expertise or license to go do. And that is, to me, like, if you look at all of those things, that is why you really come, is community. Community that genuinely cares, that's not a bunch of stuffed shirts walking around there that don't want to speak to somebody else. It's great food and great breaks and all that stuff. And what you learn from all the speakers becomes free.
So you said some really awesome stuff there, and I wanted to chime in on one last part. There's this new person, first time coming. What should they bring with them? How should they dress? Like, some of the basic questions that some people say, I've never been to this. Am I wearing a 3-piece suit? Do I have to go buy my own lunch? What should they expect in that kind of setup?
Yeah, so we'll have coffee breaks, and we will have lunches, and we will have a reception on the first day. And so those are all things that are paid for. So you don't need to go bring your sack lunch. And we'll have coffee breaks. So there's a lot, the most money spent in all of Note Expo by far, which I write the check for, by the way. The most money spent is for the food and food and beverage, right? And all of that we do there. And but it just makes it work. And secondly, how to dress. Okay, well, you know, you can wear your blue jean shirt, or you can wear your nice sports shirt like you're wearing, Dave. I'll probably wear a blazer.
Yep.
And cowboy boots, because that's kind of how I am, and about most every time you guys see me, that's kind of how I'm dressed. If you want to wear a suit, you can wear it. You know, like, this is not quite like going to Hawaiian Falls Water Park, okay? So you're going to be a little north of that. And know that, you know, I always think, but you know, I would say modern day business casual.
I would agree.
Is that fair?
That's exactly what I'm thinking about. That business casual, look professional, you know, don't come in here slumping it, right? Because people would judge you based on how you're dressed, but you don't need to be wearing a suit and tie and everything else.
Yeah.
I'd bring a laptop or something to write on.
Definitely bring something to write on. Bring a laptop, bring your iPad, whatever that looks like for you. So we'll make sure and have those times where it's like, you know, it's very intense and focused. It is a big stage. So we hire a professional company that does this and does huge events. So, you know, the speakers are mic'd up. They're on a stand-up stage. There's great lighting. It is filmed. There is great lighting. I mean, there's professional MC. I mean, there's things that we do that we're not playing at the lowest level. We're trying to play at the highest level that we can. It's not inexpensive, but it is valuable, right?
Gotcha.
And so it'll feel like a pretty good sized trade show. Our normal attendance is 425 to 500, right? So people say, how big is it? And that includes the vendors, but that's about how big it is. So it feels pretty big. There's a lot of people there. There's a lot of engagement. We'll have a tremendous amount of great vendors, like tremendous amount of vendors that will be there to answer stuff. And I'm going to put a couple of these vendors on stage that I believe can change the industry. One of the vendors I'm going to put on stage is going to be talking about an alternative to title insurance.
Ooh.
It's already approved by Fannie Mae, Freddie Mac, FHA, and VA.
Wow.
$1 million policy cost $1,000.
Oh,
$300,000 policy costs $700.
that's awesome.
Maxes at 1,000.
Okay.
Yes.
Okay.
And
So
Interesting.
someone asked about your recordings. Will they be available for purchase?
Yeah.
Okay.
And is there, somebody else asked if there's a virtual option? Can they attend this virtually, or is it just
not
in person?
virtual? No, it's you know, we will sell the recordings, right?
Sure.
But here's what I'm going to say to you. If it's virtual, you're missing the community part.
Yes.
Exactly.
And I know, and I don't go like I used to. As you guys know, I used to be gone all the time, and I don't go as much anymore. I get to pick a little more when I want to go and stuff. But I will tell you, I'm as fired up about the community at Note Expo as anybody. I'm really the host, right? I'm more fired up than anybody there about the community and connecting with you guys and stuff. And so that's what we do. And yes, it's a little more trouble. And yes, you have to travel and all. I get it. But how many times have we been somewhere when we look back and say, man, I could have thought of a million reasons I didn't want to do it, but it was worth it.
Yeah.
And I get it, right? We always talk about being away from family, being away from your children, spending $1,000 for a weekend away. I'm going to tell you that I don't know how many conferences I've been to. I'm sure not as many as Eddie, but every single one, I've never regretted going for both the education and the networking. I would tell you, me and Nate will say all the time, is set some goals for yourself before going. Have some set things that you want to meet 5 new people. You want to understand land buying. You want to have some goals set that you have to achieve to make sure this trip, time and money, makes it worthwhile for you to attend. And if you're not reaching those goals, reach out to someone in the community and go, I'm not reaching his goals. I guarantee you someone could help you.
Mhm.
Let's talk about the market for a second.
Yeah.
Yeah.
This is why you come. Okay, I have had more people that have sold their rentals and owner financed them in the last 18 months than I've seen in my entire career. This is a long
Mhm.
time now, right? I've seen more people, and that's because I simply can show them the math and show them why you can make more money than you can renting a house. And if you're a dyed-in-the-wool landlord and you think that's impossible, then you haven't seen me pencil whip it yet. Because I promise you I can do it. And I've done this for like very, very high level KW, Keller Williams people. And
Yeah.
as you guys know, I'm in masterminds with probably most of the top 500 house buyers. So I've done this at people that play at a high level. No, I'm not just taking some amateur landlord that owns 2 rentals and hypnotizing them into I'm right. The math shows you can make more money today in most cases. Seller financing your rent house versus keeping it as a rental. Second thing is multifamily is down about 25%, and every projection out there says it's down, it's coming on down.
Yeah.
So people are shifting their money from rent houses and syndications to notes. It follow the money and follow the safety. Let me ask you guys a question. I got $250,000 to invest. I got $250,000 to invest. I like real estate. So I can buy a rent house in Dallas, Texas. It'll rent for $1,800 a month. 50% of all of that rent is going to go to expenses. So I'm gonna net 900 of the 1,800 in rent. So
Right.
250,000 gets me $900 in income. Statistically, if we take $250,000, it'll buy us $2,700 worth of note payments.
Yeah.
And maybe that's 2 notes. Maybe that's not one. So I figure $65 for servicing fee because I got 2 notes and not one.
Sure.
It's going to net me $2,635. 900, 2,600. Which one would you take?
Yeah.
2,600 every time.
That's why people want to know about notes.
Yeah.
And that's why you got to be there. You got to be in the room. I think you miss out on the networking, you're missing out on the experience. And one of the things I think that most people don't realize, and even with going to all conferences out there, they're surprised you're able to meet with the speakers and chat with them. They're not some fly in, fly out person. You're going to be spending time with them, having lunch with them, conversation with them. You have the ability to reach and speak with someone with much more experience than you do.
We don't put speakers on stage that are untouchable.
Right.
Right. We're not going to do that. I mean, hey, we're all pretty seasoned here, right? Like we've all got a decent little resume of doing this.
Yeah.
We're not going to put somebody on stage that's so untouchable that the audience, like we're not doing that. Right.
Yeah.
Now, Don Davis, we won't expect him to stay with us 2 full days, but we will obviously have a time where we can do pictures and do stuff with him. But everybody else, they're here. They're there for the show. It's what they're doing. And you're right. And those speakers view themselves like you guys are speakers. They view themselves as part of our industry community.
Yes.
They want to talk to you. Yeah.
Yeah, absolutely. So I would encourage you guys, if you're interested in going, there's a link I'm putting inside the chats and all that stuff. Use that link to get into it.
Yeah.
And I would fly down there the night before. The reason for flying down the night before is because you literally will connect with everyone else who's there, who's getting in, and just start meeting people. Again, I would say, I'm going to give it a raw amount. 50% of this is about the community. And 50% is the education, right? You need to be there for the education, but you also need to be there to meet the people.
Same thing. You can buy those recordings, and that's fine. You're going to get a lot of really great information, but without that connection, that community part of it, you're really only getting half the value out of that. It's so much. I mean, and Dave and I talk about this all the time. It is so much about just being in person with people and just chatting face to face, shaking hands, grabbing a bite to eat, whatever, it makes such a difference. So it's a huge, huge thing to be there in person.
You could be friends for decades after meeting. I've known
Yeah.
Nathan by going to conferences, right?
Yeah.
I've known Eddie from being in conferences. The reason we connect is because of, so you gotta go, right? I get there's a cost to this and some time. I would just encourage you, just fly down there, right? Come down there. If it doesn't work out, I promise you, it will never not work out. That you can come back and say it didn't work, and I will, chew on that. But I'm gonna tell you, there's no way chance that you ever walk away from this not having some kind of valuable, teachable movement you can do or a connection you've made to make your business better in 2025. It can't happen.
Yeah. Same thing, Dave. Every conference, every single time I come home with something that has changed my business, my life, connections I've made, something I've learned from a speaker every time. There has not been one conference where I've been sad that I went. It's always been a benefit.
Yeah. If you have any other questions about this, feel free to reach out. And we're going to wind it down now with, Nathan's question, but feel free to reach out if you have questions about the conference, curiosities. You can go to Note Expo and look at the, sponsors as well as the speakers and see what the agenda is going to be like.
Yeah.
You won't be disappointed in the agenda if you're interested in notes.
Right. And if you're not interested in notes, you should be.
Yeah. This isn't a clothing seminar, okay?
So Eddie, you've been around for a long time and you've seen a lot of different shifts in the market and ups and downs here and there and different strategies and everything. What do you see coming down the pipe? What's coming our way in the next 6-12 months?
I think that the trend in seller financing is going to continue. I don't think that slightly lower rates are going to change the trajectory on how many people seller finance. Most people are seller financing to serve the underserved buyer, not to give people lower interest rates than mortgage rates, right? So I think the trajectory in seller financing is going to continue. I think there are going to be some opportunities with non-performing. I don't think it's going to be like some of the people are saying on the internet, because I don't think they're very connected, but I think there are going to be some opportunities with it. I think that the market stat that I looked at this morning is there is 1,988,000 loans that are delinquent, and the loans that are in foreclosure, and call that about 275,000 loans. The average days delinquent are 1,235 days.
Wow.
So there is a pin-up inventory of delinquent notes.
Yeah.
I think it's believed that after the elections that there's going to be some dumps. This is not going to be 2008. It's a different market condition. It's a different set of circumstances, but there are going to be some inventory. Scratch and dent loans are too pricey, and I seriously doubt we're going to see a whole lot of people in our world aggressively buying scratch and dent loans. Banks and hedge funds are buying these loans at yield ranges that are just not in the range. So the alternative is we have a seller finance world that there's 100,000 notes created every year. The more we can help our industry do better, the more they're going to make better notes, the more they're going to have inventory of notes for us to buy. And I think there is the runway for the next 4 years in seller financing. I think's abundance.
Yeah, I agree with you.
Yeah, I agree. And I don't think we're going to see a 2008. Like we say, we've been seeing some cracks, but I don't see it happening as the big tsunami that we had back then.
Well, there's claiming things and there's data things, right? You guys know I run in some circles where, guys literally make $1 billion investments, and so I try to listen to them as to what they see in the market. We are seeing some inventory that's getting moved around a little bit right now. It's been fairly frozen a lot earlier in the year, and we're seeing some stuff happening, and we'll talk about that at Note Expo. And I'll have couple of industry experts with me up there I'm gonna do a little frick and frack on inventory with some market guys that have been around a long time and stuff. We just try to call the ball what's real. And we try to go chase the opportunity. And I try to use experience to point people to here's the opportunity. Right. Yep. And in theory, you and we're competitors in a way, but we're not.
Yeah.
Right. We're industry friends that if we go help the industry do better, we're going to all do better.
Yeah,
Yes.
exactly.
Yeah,
Yeah.
absolutely. Well, Eddie, it was a pleasure having you on this Friday afternoon. Thank you for joining us. We are looking forward to seeing you in just a week or so, 2 weeks. So come on down there in November, fly down to Dallas. We'll be out there the night before Thursday. Come shake hands, say hello, have a nice little meal and enjoy yourself and get out there and enjoy. So Eddie, again, we appreciate you going live with us. Hold on for after hours and we'll see everyone in a few weeks. Take care, everyone.